Welcome back to the Crypto Clown World podcast. I'm your host with the honks, Jason Bruce. We are honking back in on the 28th of July, as we're rounding out this month here. Jumping back in, as always, I have my esteemed co-host with me, Mr. Christopher Lundy. How's your weekend going, sir?
It's fairly solid. I've been pretty tired throughout most of the weekend because I just went hard throughout most of the week. But I gotta say, I've made some good progress on, outside of the podcast, so some other initiatives. Very pleased with, and doing great, man. How about you?
No complaints here, sir. No complaints.
Excellent.
Just wrapping up the family stuff for the day and getting ready to jump in and see what we can do for people. So I know you've got some pretty important stories, and there's some stuff that could have a pretty big ripple effect in terms of the global economic situation, as well as the geopolitics and, all that fun stuff. I think we saw Mr. Trump pop up at a crypto conference as well, which caused a little bit of whipsaw action in the markets. So we're seeing right now what looks to be a little bit of recovery after a small dip, not just in crypto, but in some larger markets as well. So with all that said, we can jump into the news and see what you got, Chris.
Thank you, Jason. So kicking off this week's show, we've got fairly significant geopolitical news across the board, as we always do. This year, it just seems to be a red letter year for many different types of geopolitical shifts that have been many decades, if not hundreds of years, potentially in the making throughout the passage of time. So our top story for today comes from Global Research, and Global Research has an interesting story. They were actually started not long after the 9/11 attacks in 2001, and they dedicated most of their research to globalization and its discontents, as it were. But the headline is for this particular story from Global Research is Russia and India agree on de-dollarization trade and investment. And this is authored by Ahmed Adel. And here's the leader. And this is a rather long article, ladies and gentlemen. So I'm only, as I typically do with podcasts, I'll offer a paragraph or three and offer some commentary and cross-reference a few things. So let's begin with the leader. During the recent meeting in Moscow, Indian Prime Minister Narendra Modi and Russian President Vladimir Putin agreed in a joint declaration to conduct trade and investment in their respective national currencies, the rupee and the ruble, which amounts, without using the term, to a de facto de-dollarization of India, a country projected to be the world's second largest economy in the coming years, and Russia, which has already displaced Japan from the fourth spot in the global ranking measuring purchasing power, according to the World Bank. In fact, it is expected that de-dollarization will pick up even more pace at the upcoming BRICS Plus summit in Kazan, Russia in October 2024, which Russia will chair. Now, the next paragraph speaks to something I actually spoke to in last week's show, which was on July 9th, U.S. Secretary of the Treasury, Janet Yellen, during a question and answer session before the House Finance Committee, stated that her, quote, biggest fear, close quote, was de-dollarization due to the harshness of sanctions imposed against Washington's adversaries who are seeking alternatives other than the dollar. So, as I spoke to last week's show, the sanctions are really just us sanctioning ourselves. We're cutting our nose to spite our face. Continuing. Hong Kong-based analyst William Pesek of Asia Times affirms and confirms Janet Yellen's, quote, extraordinary admission. De-dollarization is now her biggest fear, close quote. Pesek contrasted Yellen's optimism from more than 2 years ago when she boasted, quote, I don't think the dollar has any serious competition and it's not likely to for a long time, close quote. And this is something that's been very common amongst, shall we say, well-heeled talking heads on establishment financial shows such as Kitco News, etc., that state, oh, the dollar's here to stay, there's no problems. Well, it could have been, only we decided to uh, engage in some geopolitical tomfoolery, to put it lightly, that resulted in America losing its standing in terms of its respect, not just respect, but also as a patron, a participant in markets overseas, such as Nigeria's, which was looking to repatriate gold from the United States. Trust in the U.S. financial system has been lost. Confidence in the U.S. financial system has been lost. And in fact, the United States has been seen as a pariah, an adversary to the prosperity of the rest of the world put together. So this speaks to India having alternative plans here. And this is quite ironic, ladies and gentlemen, because over the course of the last 25 years, but especially over the last 20 years, there's been an aggressive shift. And I saw it early in my career when I first came of age, was a massive offshoring of manufacturing labor in the United States of America. And a lot of that offshoring of manufacturing labor went towards China, Bangladesh, and of course, India. But it wasn't just manufacturing. It was followed up by call center workers, especially America Online, where a family member of mine actually ended up losing their job to that particular changeover when AOL moved all of its technical support overseas. Well, now India is just going to throw the dollar away. What does that mean for all of these companies in the United States that shifted all of their holdings to India? Well, we've clearly got a problem here. The warfare state is now starting to create a problem for the domestic money-making apparatuses, both public and private, both secret and well known, as we can clearly see. There's something else that I wanted to mention about this is Japan's currency falling off a cliff after Russia cut off their fuel, right? And this is spoken to in this paragraph of the article. It states that, quote, de-dollarization seems like a paradox when so far this year, the dollar has increased by 13% against the Japanese yen, not to mention more than 10% against the euro. However, the de-dollarization process concerns the dollar's status as a reserve currency, close quote. And that's true. It has appreciated against the yen and the euro. But what is Japan and Europe? What are Japan and Europe doing? They're going hard in terms of financing and supporting, as well as not just tacitly but actively, the war in Ukraine against Russia, right? Which has led to their economies taking the hit, which speaks to another clue. Are these wars being done deliberately to decrease the prosperity of America's adversaries? Or is it done to decrease the prosperity of themselves, their own people, and their allies? Perhaps this is a form of both kinetic and economic warfare simultaneously. We shall have to wait and see. But another problem is the military-industrial complex, and one other factor of the article that I'll speak to is about the Atlantic Council, specifically the, quote, Geoeconomic Center of the Atlantic Council, which celebrates the buoyant U.S. economy but hides the fact that U.S. growth is due to the, quote, war economy, close quote, of the military-industrial complex, whose contribution to the domestic GDP and wars in Ukraine and Gaza. Yeah, close quote. So that means that's more than a tacit admission that all of our economic gains are strictly the war economy now. Yeah. An endless series of proxy battles, as we got to see in Metal Gear Solid 4. Interesting predictive programming exercise, unrelated to the podcast. Something that I encourage you to have a look at. Have a look at Mission 1 of that game, ladies and gentlemen, and compare it to the present day. You'll find some shocking parallels, including machines smashing boxes full of watermelons. So just have a look at that. Moving on. So we got the unredacted coronavirus protocols of the German RKI Institute were leaked by a whistleblower. They were leaked containing explosive details, including that the phrase, quote, pandemic of the unvaccinated was a hoax. Okay. And I encourage everyone to look into this a bit more completely. There are 2 articles that speak to this. One is on Aya Velasquez's X account, and there's also a broadcast that was posted to X that was done at 10 a.m. German time at the time of the releases. And there's also a related article in Berliner Zeitung about this. So this is rather damning information, because at the exact same time that the entire COVID scam is being fingered as exactly that, they're trying to memory hole it and force the conversation and our Overton window attention gaze towards other shadows on the wall. Don't take your eye off the ball of the COVID criminals, ladies and gentlemen. Have a look at these articles. Use translator apps if you need them. They are plentifully available. No specific endorsements. Moving on, the Spectator Index posted a brief piece of information that should concern everyone that's not just listening to the podcast, but worldwide. So hackers have successfully leaked internal documents from Leidos. Now, Leidos is one of the biggest IT service providers to the Pentagon, huge military industrial complex contractor. And Leidos is well known for its cybersecurity presence and cybersecurity services that it provides to not just the U.S. government, but to private corporations. But it primarily focuses on the U.S. government, the Pentagon. They're very much a military industrial complex mainstay. And what does this mean? Well, from my perspective, it means that we've got a 2-pronged issue here. We've got someone potentially, who knows, an insider, either at Leidos or outside of Leidos. I mean, when you post hacker, is it really a hacker, or is it a leak? Yeah. What is it really? Because we don't see any specifics as to what the breaches are. We don't see any breach posts. So you can only take these types or these pieces of information with grains of salt. But this has massive implications for national security. It's not going to be a fun time. And let's not forget that the Pentagon has access to everyone's social security numbers. They have access to everybody's bank account details. They have collected so much data, it is absolutely astonishing. But this leak of documents is beyond dangerous. It exposes classified military information. It reveals unpublished CVEs, common vulnerabilities and exposures that may not yet be in the public domain. It can disrupt defense operations. It can reveal flaws with existing military equipment that's deployed. It's not as bad as the Office of Personnel Management hack that exposed every single person working for the government as a contractor, including intelligence agencies, which was purportedly done by China several years ago. But that's really going to be an issue, and this hasn't really hit the news cycle in a way that I think is appropriate for this particular sort of problem in any way, shape, or form. It's quite bizarre from my perspective that this isn't being covered more aggressively and with a little bit more focus, because if it was me, I would be basically putting the Pentagon on lockdown, and I would be getting some committees in place, as well as reassessing what's happening geopolitically and taking a step back. But that's a conversation for another time, sadly. Ladies and gentlemen, we're just going to see how it plays out. So let's move on. Now, Jason, I'm going to pass this part over to you, because this is going to involve some video playback for the audience. And this is about the full video for this is on Rumble. And this is about Nestle being accused of, and keep in mind, these are accusations. These are not, technically speaking, proven yet in a court of law. Accusations. But Nestle's no stranger to controversy in terms of its business practices, and they have been accused of illegally filtering polluted water for sale for decades. So, Jason, I'll gently kind of and toss it over to you to play that back and just give me a signal when it's ready to.
Yeah, will do, Chris. I've got this queued up here, and just real quick to preface this, if you've ever drank Nestle's bottled water and you couldn't figure out there was something wrong with it, you might want to like brush your tongue or figure out what's going on with your taste buds, because it's just not what water should be, and their products are not what food or somebody that represents themselves as a food manufacturer should be. So I would encourage people, after you watch this video, take a little more look into Nestle's business practices if you haven't. They're very unscrupulous, and they are connected to some very, very questionable entities that are sort of involved in what people would call that, shadow government or corporate fascist layer that sort of exists above what most people think is the upper echelon, being the president and Congress and everything else, which really at this point is just a dog and pony show, as we try to expose here. So I'll let people draw their own conclusions here with this video.
Quote, decades of systematic fraud. A media investigation says the Swiss food giant Nestle is using illegal methods to filter contaminated water and then sell it to unaware consumers since the 1990s. An independent advocacy group, Food Watch, has sued the company and called for authorities to intervene.
Nestle has apparently sold billions of bottles of water that had nothing to do with natural mineral water for decades in France, Europe, and even worldwide, and consumers were completely clueless. If the new media reports are confirmed, there's only one conclusion: the mineral water scandal is the result of decades of systematic fraud by the food giant. The authorities must now act quickly. A judicial investigation is now needed. Nestle is not above the law.
The investigation said the company was using sources contaminated with feces, bacteria, and pesticides. Then was filtering that and selling it as natural mineral water. Those toxic substances were found in samples of Nestle products. French authorities have warned about the potential health risks, and the European Commission has launched its own inquiry into the matter. But that's not the only controversy surrounding Nestle. The company has promoted its baby formula as being better than breast milk. It has also misrepresented employees as supposed medical professions to convince parents to buy their products. An investigation found that the deaths of millions of babies around the world were linked to the use of Nestle formula instead of breast milk, as the product was allegedly mixed with polluted water by consumers. And Nestle has also been accused of using child labor in cocoa production, as well as slavery and child trafficking on plantations in West Africa. Now, its products have been reportedly described as being unsafe for consumption. So let's take a look at some of the numbers and data together. Nestle products, including bottled water, are being sold in huge amounts around the globe, with Asia, Oceania, and Africa being among the key destinations. Last year, the company made more than $650 million from water sales in those three continents. Now, we heard from a consultant to the UN Water Conference, Michael Ale. He said that none of the African ventures producing so-called pure life bottled water are not located at a source with clean water.
Pure Life, it's a major brand of Nestle in Nigeria and other African countries. As far as the information that is on the label is contradicting the original content, as the case may be, or original indication, then it's more of a conspiracy against the people that are buying. So I think the Consumer Protection Agency in different countries after the report, should definitely find a way to look into this and probably do a verification on this fact that's been raised against this company. So I'm very sure that if a very detailed impact evaluation is made, is carried out on most of these companies in different African countries by Nestle that produce pure life, I am very, very sure and convinced that none of them is located close to a spring source where the labeling natural spring water is found on the bottle. So invariably, I don't think they could definitely sail through the investigation.
All right. And there you have it. So, again, draw your own conclusions, folks. These companies just don't have your best interests in mind. Chris, back to you.
Yes, thank you, Jason. As you can see from this particular story, ladies and gentlemen, if these particular accusations are proven true, it's going to be in your best interest, especially considering with all of the poisoning of the food and water supplies that we're seeing at present, to get yourself a marine grade water distiller that can distill everything up from seawater without having to use desalination. And those particular appliances do exist. They'll save you tremendous amounts of money, and don't support companies that do this, if it's proven to be true. But let's not forget that Nestle publicly stated, their CEO did publicly state, and this is a direct quote, that access to water is not a human right. And this very much speaks to that particular quote. So just keep that in mind. Moving on. Now we're going to cover the strategic Bitcoin reserve topic at the Nashville Bitcoin Conference. And this is based upon an unfolded article of Wyoming Senator Loomis, the U.S. Senator Loomis, planning to announce legislation for a strategic Bitcoin reserve at the Nashville Conference. Now, both Donald Trump, and Robert F. Kennedy Jr. both appeared at this conference. And just here's a few talking points from what she has brought forward. So, now, Republican Senator Cynthia Loomis of Wyoming is preparing to announce new legislation that would require, not suggest or ask, but require the Federal Reserve to hold some Bitcoin as their strategic reserve asset. Interesting, considering that the Federal Reserve is not the federal government. Very interesting indeed. That's the Federal Reserve as the custodian, not the U.S. Treasury. Very interesting. Next talking point. Legislation aims to establish Bitcoin as a mainstream financial asset and would hold the Fed to buy and hold Bitcoin in the same way it holds gold and foreign currencies. Loomis has been shopping the bill to her colleagues in the Senate Banking Committee to get co-sponsors, and the implementation of Bitcoin as a reserve asset would require the support of the president and Congress, but it would be a significant step towards mainstream acceptance. Now, in addition to this, Robert F. Kennedy Jr. also publicly stated that as part of his platform during his presidential campaign, that he would direct the United States Treasury to purchase up to 550 Bitcoin daily until a strategic reserve count of 4 million Bitcoin is achieved. Donald Trump has gone farther in his party platform, saying it's going to be 20 million Bitcoin. What's going to be used to buy all that Bitcoin in a de-dollarized world? Very interesting. And the fact that it's being proposed to be held by the Federal Reserves, I think, should raise some serious red flags for people. With what's going on in the world, it's the last thing, in my opinion, that the establishment wishes to do is to make our lives better. But they may end up doing it anyway, simply as a way to prevent their own shirts from being lost. So this is interesting, but at the same time, Bitcoin is a transparent asset, and BlackRock is buying up all the big mining companies, and there's still a 51% attack narrative that has yet to play out here. I don't think they'll be successful, but I also think that Russia and China have shot themselves in the foot with their, well, mainly China, with their aggressive anti-Bitcoin mining stance. They may need to reverse that policy because crypto is going to be an important part of the ecosystem of the future. But look, just a few years ago, ladies and gentlemen, Donald Trump and all these other people said the dollar's here to stay and crypto's a nothing burger. Now they changed their tune. Done a complete 180. Anytime you see talking points shift from the opposite of one position to the current position, should raise some red flags. Just keep that in mind. Speaking of flags and things going on, I'm not going to cover it this week, ladies and gentlemen. The big protest against Benjamin Netanyahu's speech in Congress. But interestingly, while that speech was taking place, and this is covered in a Zero Hedge article, during that very same day, this was published on Zero Hedge. Bonds and big tech bloodbath. Mag 7 meltdown accelerates as yield curve disinverts to 2-year high. And there's also a Market Watch story that I'll speak to as part of this. But the Magnificent Seven stocks lost $1.7 trillion. And this was the artificial intelligence trade. The Magnificent Seven of mega cap tech stocks booked their worst daily drop since the launch of ChatGPT. $1.7 trillion is a enormous amount of money, ladies and gentlemen. But let's have a look at the leader of the Zero Hedge article. So here we go. Ugly Micro, Mag 7 earnings fail to impress enough. And Ugly Macro, home sales and manufacturing meltdown, left an ugly day for stocks and bonds, the long end, while the dollar, crypto, and commodities were relatively unchanged by the close. And it's got Ron Burgundy with his, well, that escalated quickly meme without the text below that. Continuing, as UBS has noted, similar to last Wednesday, today seems very much an equity event. Now, this was published on July 24th, which would have been last Wednesday, so it would have been 2 Wednesdays ago. So just keep that in mind. So all the major U.S. equity indices were lower today on that date, on July 24th. But mega cap tech was hit the hardest, which caused the NASDAQ to fall down over 3.5% for its worst day since December 2022. Now, keep in mind, $1.7 trillion is quite a bit of money, but this is what we call, as we've called it in previous shows, from interest rate hikes, a trend reversal. We haven't seen this big of a drop in the Mag 7 market cap, at least on a macro level, from looking at the numbers since 2022. But these drops have become more dramatically pronounced since 2019, when the whole repo scare, 2019-2020 timeframe, when that repo scare came into effect in the latter half of 2019. So I expect to see more of these, and have a look at these charts, because if you look at the focus for the selling pressure, and this is another piece of the article here, and the source of this is Bloomberg, the focus for selling pressure appeared primarily on Google's inline reiterating capex. That was causing concern in some of the AI pockets of the market, with VRT down 10% and AI semis down 420 basis points, data centers down 330 basis points. Data centers going down 330 basis points is a bad situation. But volumes are very explosive on the 24th, tracking plus 18% versus the trailing 20 days. So there's quite a few market participants that are looking to rebalance as a result of this melting AI leverage. So be cautious with your investments in AI, ladies and gentlemen. Definitely looks to be a trap for people's money at this point. Choose your projects wisely. Moving on. Big event happened in the debt rating world this past week. So Fitch has downgraded Ukraine's credit rating from a double C to C, which means that a default has already occurred or is imminent. And this was reported by Reuters on July 25th. And the decision was made due to a new debt restructuring agreement with bondholders. And the proposal has included a nominal 37% discount on Ukraine's outstanding international bonds. Pretty steep discount. And that would save Kiev $11.4 billion in payments over the course of the next 3 years. Let's translate this. If you're at C credit rating, that means your economy has collapsed completely. That's what that means, at least from a financial standpoint, if you're looking at a C rating. A C rating is a place that just got completely bombed out, and Ukraine is getting completely bombed out. No surprise there. So why is this so important as a single deal? Well, simple. BlackRock invested considerable portions of its balance sheet into the Ukraine reconstruction narrative, and is about to lose their shirt because a sovereign default means all that money they gave Ukraine, they're not going to get it back. Not one penny. It's all been stolen away. Let's not forget, ladies and gentlemen, how Ukrainians, especially the First Lady of Ukraine, takes U.S. taxpayer money and goes and buys luxury villas and very expensive cars with it. This money isn't going towards the front, and it's not going towards the war. They're just taking it and lining their pockets with it. That's what they're doing. So this is why the Ukrainian reconstruction narrative is going to fail, because when you put kleptomaniacs in charge of your country, they're not going to give the money back. It's as simple as that. Moving on, this is a cursory reference, but I did mention having a look at the Hashemite Kingdom of Jordan. Well, the Kingdom of Jordan has issued a royal decree to dissolve parliament. Now, Jordan is not the first Middle Eastern country to issue a royal decree to dissolve parliament. It actually happened earlier this year in Kuwait as well. The situation in Kuwait was slightly different, as it was discovered by the Emir of Kuwait that there was, or had been, a plot amongst certain, shall we say, seditiously minded individuals in the parliament to essentially go through with some sort of palace coup. That was the thesis. Now, in the context of Jordan, I think it's more of a consolidation of power scenario, since they brought in NATO, they brought in ISIS, now they're dissolving parliament. So it appears to me that Jordan has allowed itself to be completely colonized by NATO at this point. So I expect Jordan to be a primary target of the resistance axis, both internally inside Jordan and directly outside of its borders. The Islamic resistance in Iraq has already warned that they have the capability and, frankly, the desire to team up with Jordanian individuals that would be willing to partake in resistance actions with them. And this could lead to significant destabilization in Jordan, but due to the NATO presence, that could stir up some unexpected dangers. But we shall see how it goes. It's not looking good for the Kingdom of Jordan with the moves they're making. They're making themselves into a target for the resistance axis in the Middle East. Moving on to the next story. Washington has given Netanyahu a full backing to expand the war in Lebanon. This is according to a report on the 25th of July, where a former Israeli intelligence and security official, Yuval Malka, told Hebrew media on the 25th of July that Washington has greenlit a wire war on Lebanon. Now, this is according to a report that Mr. Malka gave to Israel's Channel 14 News. Quote, according to the information I received from the delegation of what I know, Netanyahu has received full legitimacy in the United States to wage a war in Lebanon. Close quote. Now, the Israeli army has reportedly signaled to the government that the time is ripe for an expanded war against Lebanon, according to a defense analyst for Hebrew media. And this analyst in question is Amir Bobat, if I'm pronouncing it correctly. Quote, the Israeli army is prepared for a major ground maneuver in Lebanon and warns any delay will be in Hezbollah's favor when there is progress in the background and negotiations to release the hostages, close quote. Now, Amir Bobat is the military editor and senior defense analyst for Israeli news site Walla. And that was on the 24th of July, which would have been last Wednesday. Also, he added, quote, the Israeli army is sending a signal to the government. We are at war. We are at the height of preparations for war in the north, and now is the right time, close quote. Now, subsequent to this report, there was an armed attack that took place in a city in northern Israel that's largely inhabited by Syrian Druze Christians. And those Druze Christians refused Israeli citizenship after the Golan Heights was annexed into Israeli territory at the time of the conflicts that brought it in. Now, there are many conflicts in between 1967 and the 1980s that resulted in Israel expanding its territory, namely into Lebanon, which it occupied from 1982 until 2000. Lebanon was occupied by Israel for most of the country was from 1982 until 2000. So, and as we speak, prior to showtime, there were reports that a war against Lebanon is imminent within the next 2 days. But we've been hearing this for the last 8 or 9 months now that a war with Lebanon was coming. So there's definitely some predictive programming happening there. And as we speak, there are flight cancellations happening towards inbound and outbound flights in Lebanon. And prior to showtime, there were no civilian aircraft in the skies over either Lebanon or Israel prior to showtime. So something's about to go down. And we got a pretty significant story out of India, ladies and gentlemen. And this is back to the crypto space to move on into that. Wazir X is to, quote, socialize $230 million security breach loss among customers. This is according to TechCrunch, an article published on July 27th. Here's some talking points from the article. Indian cryptocurrency exchange Wazir X plans to, quote, socialize, close quote, the $230 million loss from its recent security breach among all its customers. No backup funding. Interesting. The company will rebalance customer portfolios, returning only 55% of their holdings while locking the remaining 45% in equivalent tokens. The breach resulted in the theft of over 200 different cryptocurrencies, with popular tokens like Shiba Inu and Ethereum being targeted. Wazir X is offering users 2 options moving forward. One allowing priority for recovery efforts, but with restricting withdrawals. So you can put yourself in line to have your funds recovered, but you don't get to withdraw any of your funds. This is why you should never trust centralized exchanges, ladies and gentlemen. You should never risk more than 10% of your pot with any exchange. Ever. Especially well-capitalized ones. Because when something goes wrong, there isn't accountability. There isn't an effort by their venture capital backers or anybody else to plug the loss or to make it right. They'll come up with more coercive measures to control your trading and control how you're able to do anything on the platforms.
Funds are not Safu.
Yeah, exactly. Funds are not Safu. So trust but verify, ladies and gentlemen. Moving on to our next story. Now, the EU has released 1.5 billion euro in terms of frozen assets to Ukraine. That has gone forward, but Switzerland has opted out. Now, before I go forward with this article, I just wanted to remind the audience that the only reason right now why we don't have massive financial warfare targeting our banks and why all Western currencies aren't completely in the toilet is because the only thing that we're doing with the money that and when I say we, I'm talking about the Western countries. I don't consider myself to be a part of them, as it were, per se, obviously. But in this particular context, the funds that are being granted to Ukraine are interest on what has been collected, not the actual funds themselves. That's my understanding. If that has changed, I do not have the information at showtime, but that is my understanding. Now, Switzerland has refused to transfer to Ukraine income. This is important to note. Income from Russian frozen assets stored in Swiss banks. This is the interest on it. So they're basically just taking the money they stole from Russia and keeping the interest from it. So they're not actually stealing the funds. They're just profiting off of the theft of those funds. But the funds themselves have not been reinvested yet. Now, this was reported on swissinfo.ch initially. On Friday, the European Union announced the allocation to Ukraine of the first income from Russian assets worth 1.5 billion euros, but Switzerland didn't follow suit, which was, and this is according to the State Secretariat for Economic Affairs of Switzerland. And this decision was made according to the Secretariat with, quote, it was made, quote, in accordance with Swiss law and international obligations, close quote. As of April 2024, Switzerland has frozen more than 7 billion Swiss francs belonging to the Russian Federation. On whose orders, I think we know. Who else is in Switzerland, ladies and gentlemen? The World Economic Forum. Moving on to our next story. And this is about Russia, interestingly. This is from the Retards of TikTok Telegram channel. Ukraine has reportedly hacked ATMs across Russia in a massive ongoing cyber attack as of Saturday, July 27th, yesterday. And this is day 5 of that attack. A source working in Ukrainian intelligence has told the Kiev Post. Now, the customers of several Russian banks could not withdraw cash because when attempting to use the ATMs, their debit and credit cards were immediately blocked, the source said in written comments. Quote, an unprecedented attack by cyber specialists of the main intelligence directorate of the Ministry of Defense of Ukraine, HUR, on the Russian banking sector, which is involved in financing the armed aggression of the Russian Federation, has been going on for several days in a row, it said. So I find it interesting that these ATMs were able to be so easily compromised, which tells me that there will be efforts going forward to protect the use of cash, because this is clearly being used as not just a weapon against the population, but also a weapon against the government. Now, I don't know how our demographics look for the show. I haven't looked at a chart or anything, but for the younger members of our audience, let's say you're below the age of 25, in the late 1990s, during the Russian financial crisis, there was a run on the banks where people were going to take their money out of the banks en masse in Russia, in South Korea, North Korea, China. It was bad. It was extraordinarily bad. And it happened in the late 1990s, 1997 through 1999 was when the Asian financial crisis came through. And during that crisis, many people were not able to get their money out of the banks at all. Whoever got to the ATM first got their money. So just remember, ladies and gentlemen, whenever there's a bank run, those who panic first get their money out. Those who panic last get wiped out. Don't be the latter. Very important. Moving on to our next story. Hungary, and this is another one from Global Research, ladies and gentlemen. I definitely encourage the audience to have a look at Global Research's articles. They tend to have more scholarly analysis rather than strictly geopolitical. And it's a great resource. Now, the title of this particular article is Hungary and Slovakia react to Ukrainian hostility. As predicted by several experts, Hungary's patience with Ukraine has run out. Budapest has announced that it will block EU aid funds to Kiev until the neo-Nazi regime resumes the transit of Russian oil to Hungary and Slovakia. The move is important for the recovery of the sovereignty of some European countries amid the current context of absolute submission to NATO, in addition to further deepening the diplomatic crisis between Kiev and Budapest. What does this mean? Well, it means that Hungary is using their presidency of the rotating presidency of the EU to break rank with the EU to say, you know what, we need Russian oil back in our shores. We need it back in our economies, and we need it now. Does this mean that Eastern Europe is about to partner with Russia and break away from the EU? Will Hungary leave the EU to join BRICS? Will Slovakia do the same thing? And what will NATO's reaction be? Because this is a countermove that NATO didn't expect, that it's actually going to lose some of its countries in the heart of the Eastern Europe. Look very closely at what's happening with Hungary and Slovakia, ladies and gentlemen. Robert Fico, the president of Slovakia, has already had an attempt on his life. It's likely that Viktor Orban will as well. But there's something else here. Viktor Orban understands, and Viktor Orban has been a diehard, unquestioning supporter of the Israeli regime throughout his entire time in power. And he knows that in order to maintain stability for his country and also, maintain the current state of affairs with the Israelis, he is going to need to make sure that he is able to gain access to Russian oil. But what happens if he joins BRICS? That's not going to go over well with America. It's certainly not going to go over well with the Israelis. So there will definitely be threats to Hungary's leadership, and potential assassination attempts, I think, are, if they haven't been thwarted, are certainly going to be out there, as they have already targeted one European leader, one sitting European leader. Okay, moving on. This goes into the attack I referenced earlier, which is being used as the casus belli to go to war with Lebanon for the Israelis. Now, this is about the attack that happened in Majd al-Shams. And the article in question is, following Majd al-Shams incident, full-scale war with Lebanon is near. This is according to the Israeli foreign minister. Now, Israel blames Hezbollah for the attack on a soccer field in the Israeli-occupied Syrian Golan Heights that killed 12 young people. Eyewitnesses on the scene stated that it was an Iron Dome interceptor missile. Now, here is the leader. Israeli Foreign Minister Israel Katz said on 28th of July that a full-scale war with Hezbollah and Lebanon is near, following a mysterious missile strike on a soccer field in the town of Majd al-Shams in the Israeli-occupied Syrian Golan Heights the previous day. Quote, "We're approaching the moment of full-scale war with Hezbollah and Lebanon," close quote, Katz told Israeli media. Israeli military said on Sunday morning that it had conducted overnight strikes in various locations in Lebanon, including Borj al-Shmali in the Tyre district, and areas in the Bekaa Valley, allegedly in response to Saturday's bombing in the town of Majd al-Shams. Now, the New York Times noted that the, quote, "the Israeli strikes appeared to stop short of a major escalation," close quote, but that, quote, "there were strong expectations on Sunday morning that Israel still might mount a bigger response," close quote. As of showtime, that response is still not in effect. But stay tuned for that. So Israel is blaming Hezbollah for the strikes. Hezbollah has issued an official denial of this particular strike, and eyewitnesses are claiming that it's an Iron Dome interceptor missile, and there has been footage claiming to show that interceptor missile falling on the city. So any effort that's made to bring greater pressure to bear in the northern front is likely to continue, whether it's real or imagined. So I think that what will happen is we're going to see more domestic discontent within either Israeli society amongst its Jewish population, specifically the Haredim, who are currently being conscripted. They have claimed that they will leave Israel if they are conscripted. There's that. And there's also the possibility of armed resistance inside of Israel, not just Jews, but also these Jews Christians. But it will be very chaotic and inexact, because the question at this point is who is going to take up resistance and who will simply try to get out of the way of the coming storm. And that's difficult to say because most of Israeli society is, that they are very much like Americans. They're comfortable. They're relatively, pleasantly plump, as it were, and don't really have the appetite for war. Well, war's coming. As Gandalf once said, ladies and gentlemen. So that's that for the Levant. And our last story of the day is multiple countries, including Norway, have urged their citizens in Lebanon to leave the country. And this is not just Norway. There's several others, including the United States, France, and several others. But here's the quote from the Norwegian Foreign Ministry. Quote, the conflict between Hezbollah in Lebanon and Israel has escalated, close quote. The embassy said in an Arabic language social media post. Norwegian authorities remind you of travel guidelines that encourage all Norwegian citizens to leave the country. In case the situation worsens, travel options outside Lebanon may become limited. In such a situation, the Norwegian embassy will have very limited resources to assist Norwegian citizens leaving the country, close quote. So, and as of right now, ladies and gentlemen, Israeli artillery fire is being reported towards southern Lebanon. This is based upon fighter jets, and this is based upon OSINT feeds. So this is a developing story, and I encourage the audience to have a look at this because it looks like the war is about to take a new dimension. And those are all my talking points for this week, Jason. So back over to you for Q&A and TA respectively, sir.
Thanks as always, Chris. Much appreciated for taking us around the world and informing us what's going on. So, always a lot to digest there. I encourage people to look into that stuff on their own time, do your own research, draw your own conclusions, be objective. We try to remain as objective as we can here with everything that's going on and how it affects us on a day-to-day basis. So, thank you again, Mr. Lundy. I'm going to jump over to the technical analysis here. I kind of just want to highlight a little bit of kind of what you were talking about with the drop in tech. We did see a little bit of a dump in the S&P futures from the 24th of July until now. So it looks like we're kind of in a falling broadening wedge here. Really doesn't look all bad. But there was a pretty significant bearish divergence right here. I'll get rid of this fib so you can see the price action a little bit better. But you can see here this swing up in price action where we closed higher than this area represented this dramatic swing down on the RSI. So that brought the price action down lower here. Now, technically, I'm not seeing the divergence on the 4-hour here that I normally would like to see in order to dig this out, at least from like a classic bullish divergence perspective. But there's a couple things that are telling me that we're probably going to get a bounce here. First of all, the price action is kind of moving up to this point of control here. If this area around like 55.34 gets broken, you can likely expect a bit of an uptrend to resume. Now, the drop itself, pretty much came down to the 0.5 fib. There was a little bit of a high volume node just below that. So the price action's back above that 0.5 fib. Typically in the traditional markets, 0.5 fib is a pretty normal retrace, and continuation from there would be bullish. So with that filling this inefficiency here, which I did highlight on the last broadcast, this right here denotes that this is probably bullish price action. And we can see there's one more bit of confluence at this point. And again, I would prefer at the end of these moves to see a bullish divergence, and maybe we have that on some smaller time frames. But what we do have here on the 4-hour is actually pretty nice hidden bullish divergence, where you can see we're much higher on the RSI here, but much lower in the price action to where we drew this fib from. So It's a pretty strong hidden bullish divergence. So for what it is, we do have to respect that. Again, the inefficiency was filled to the downside. There is actually an inefficiency to the upside now. So if we take a look at that, that inefficiency is going to be just above the 0.5 fib. I would say if you flip that, or even flip this area here into support, which once again, that's right around that 55.30, 55.35 level, you should see some continuation for the S&P. If we see rejection or breakdown from those levels, then we're going to have to start talking about some more bearishness coming into the market. So keep an eye on that. Let's see if there's the bullish divergence on the smaller time frames I was looking for, and lo and behold, there it is. So and got that divergence there, which, you know, you're starting to see a little bit of a breakdown on the extended part of it, but just in terms of how this played out from here, you had this swing down here where you're lower in the price action but much higher on the RSI. So this is technically a bullish divergence on the 1 hour. It's what I would expect to see if you were starting to bounce from this channel. All right. So moving on over to Bitcoin, we're going to take a look at the Bitcoin futures, and there are some inefficiencies here that we need to address to the downside. So right now, this market should be opening, I believe, in I think the top of the next hour, I believe, for CME. But if we take a look at the 4 hour here, stochastics are just starting to curve down. There's a fairly significant bearish divergence that's coming in here where we see lower lows on the RSI, higher highs in price action. And this almost looks like it could be, you know, something like this forming. You would have a measured move like that, and look at that, lo and behold, that takes you down to that inefficiency, which again we highlighted on the last show. Even though we've seen the extension in price action here, this is telling me this inefficiency needs to be filled for Bitcoin down around the $58.8 thousand level. Oh my goodness. Are we going to see that type of a retracement for Bitcoin? It's totally possible. It's totally possible. Be very cognizant of the fact that we could still see some leveling out and some dippage here. And I want people to note something else. All right, we do have this 200 daily moving average that's curving up. By the time this comes back down to that level, this 200 daily may have curved up to the point where it can actually come back down and retest that physically, as this did not quite make it down to that area. So we'll have to keep an eye on that. But this 4 hour stochastics and this bearish divergence is telling me there is actually a likelihood of some retracement in the crypto markets. If we do see that, folks, consider it a buying opportunity. Now, I want to ask you, first of all, if you made it this far and you made it through the news section and that you enjoyed that information that we brought to you and that you're here taking in this technical analysis, please, if you haven't up to this point, make sure that you are liking this broadcast on YouTube. Back out on the app or close the little bubble or whatever needs to be done to get to the area where you can hit the like button. You also want to hit subscribe and the bell for notifications. That way, folks, we notify you when we put this stuff out going forward, and there is going to be a lot more content coming out during the bull run within the next year along with these podcasts. So keep in mind what we're bringing you here is a lot of value, and honestly a lot of folks charge for the type of stuff that we bring you here. So I really hope you're enjoying it. However, keep in mind, none of this stuff should be construed as financial advice. I'm not a financial advisor. What I would encourage you to do if you're making financial decisions, first of all, do your own research. Get yourself a financial advisor if you feel the need to do so. before jumping into any coin investment, project, or trade. So with all that said, the inefficiency for Bitcoin looks likely to fill with this bearish divergence and stochastics pointing down on the 4-hour. Again, this should be looked at as a buying opportunity in this market. If this is not a buying opportunity in this market, then we're going to be looking at least 6 more months of sideways to down action before we move up, and I don't see that as being the probability. With that said, right now is the time. If you've been on the sideline, if for any reason you took profit before, if for any reason you didn't enter the market over the last 2 years, this is quite likely your last chance before the real bull run kicks in and we start to see gains like we saw in 2021 start to pop off in 2025. You have to position yourself now if you want to take full advantage of those gains. If you don't position yourself now, you will find yourself experiencing extreme FOMO when these cryptos start going up next year, and they will start going up. Even the crappy ones will start going up. At the very least, you will see them pop back up to their 0.5 or 0.168 extension. Okay? Excuse me, 0.618 extension. So be prepared, folks. Be prepared. This is the last opportunity you will have to be prepared for next year's bull market and the subsequent altcoin cycle that I believe honestly could potentially last until the end of next year or early 2026 before we see really significant pullbacks in the market. But we'll see. Some people are projecting a much shorter market and that Bitcoin will peak at the end of this year and that we'll have an altcoin season into early next year and then the bear market will start. I tend to think that we'll see Bitcoin continue to go up and peak sometime early next year. Ethereum will peak out sometime next summer. Altcoins will follow into the end of next year, maybe even a few beginning 2026 before we see 26 and 27 be an absolutely brutal bear market. So that's a little longer term prognostication I'm putting out here right now. With that, I'm going to move over to the Bitstamp chart. This is actually the one that I had that was zoomed out. All right, so right now I think it's still, there's some potential we're in like that head and shoulders type of a thing. Just to clear this up and make it easier, I'm going to delete that for right now. But what I want folks to really see is this big ascending triangle that we're setting up for. This thing is beautiful. All right. You're wicking above the 21 MA on the weekly. Will close there within the next few hours. And this should represent a bullish candle. Even if we come back down and get some retests at 21 MA, we should get the bounce. And this bounce here, folks, is going to be massive. All right. The way this is setting up right now, 87,000, probably low side. And keep in mind that move is going to pop us up above this critical purple line, which was the long-term trend line support turn resistance. Okay. Actually, that may have, yeah, that actually popped off because I think we flipped out to log. Let me fix that up here. There we go. That's what we wanted. All right, so we're literally, look at this. Literally closing above that. It's so critical to close above that with a couple weekly candles after wicking back down there. And then you've got your stochastics in a position of strength here. This is huge. You've got your RSI just flat. It's flat as a pancake. Look at this. That's consolidation. It's consolidation above the 50 level. That's showing strength. So the weekly is showing a lot of strength here. A lot. Close at this level. All right. Your next idea of where we're going is going to be pretty nice here. All right. I'm going to flip the log off to get this. But if we were to look at a measured move, this plays out as a bullish triangle. That's going to take the price just north of 100K. Maybe just below $105,000. So that could be the next significant move for Bitcoin. 85K area and over 100K. We'll see how that plays out. All right. So that's a little bit of an updated macro for you. Let's see how this is kind of moving on Coinbase. I said that we might have this consolidation in this sort of a wave range. Kind of seeing that right now. Keep in mind, once again, this 4 hour, you've got this bearish divergence. That is something to keep an eye on for BTC. Not sure what I had that line there for. But this is kind of playing out the way we had sort of looked at it. So we'll see if we get retracement back down, come back up, a little more consolidation, and finally see breakout of the range here. Which, you know, we're going to need to see a couple 4 hour candles close above this, like, you know, $70,000 to $70,500 level. Maybe even like 71K. All right. So those would be levels to look for to the upside. There's going to be some significant resistance there. So we move over to some other Bitcoin charts. 4 hour on Binance. Stochastics are starting to bottom out. You're holding serve at the 21 MA and above the local point of control. So that's interesting price action. Is this the most bullish looking flag that I've seen in my life? Bit of a rising wedge, to be honest. Bit of a rising wedge. You know, can this end up having a bullish tilt if we get the right divergence to kick in? Yeah. You know, we had this hidden bullish here. So the hidden bullish played out. And you wick back down to the 21. That was like right when Trump was speaking at the conference, which was weird. It was like really bullish content of his speech. But it still wicked down and created this little accumulation zone. So now you got kind of... this area here that you're sort of ranging in. I don't like these symmetrical or chubby triangles. A lot of the time these will break down. So like the breakdown on that would be pretty significant. Would take you right back into what you would consider a standard retracement zone, just above the 706 fib, so just below a golden pocket. Upside breakout would take you north of 70K, somewhere around 70.7. Alright, so watch those levels on the 1 hour for BTC. Bitcoin dominance is currently breaking out. We're at about 56.7%. So we've had resolution on this triangle here. We were talking about this for quite a while. Is this going to be the last move for BTC? Finally get up into this range that we've been talking about for months, maybe even years now, around this 60% dominance, which should signal a top for BTC, or at least the beginning of alt season. We've been waiting for this for a while, but this is pretty clear breakout, retest on the RSI. Yeah, breakout here. You're really not even retesting this. You're just kind of flagging out and breaking. But, you know, measured move here, right? Be something like that. So it might even take you a little north of that zone, maybe 61.5%, but we're headed up there. We're headed up there. Even if you were to look at like a fib extension, yeah, that'd take you right into the zone, the 1.618. So I'd probably look around that area to be a little more likely, around 59%, maybe even just above. So I don't think this full measured move has to play out. Just playing around with that a little bit. Again, been looking in this range, 59 to 60% for a long, long time. All right, so tether dominance obviously has taken a beating. Should be likely to keep the downtrend intact. If Bitcoin wants to keep moving up, this needs to stay below the 200 weekly. And it's actually below the 200 daily now as well, so could be more bearish movement here. This is not like a bull flag type of a thing. Unless we're looking at like a diamond. Maybe that's a diamond reversal. That would have to be a diamond reversal. You know, doesn't look strong. In fact, no, not quite. But you know, this doesn't have much in terms of bullish vibes for me here. Let's swing out to the daily. Let's see if we can get a little more of a picture of what's going on. I mean, you're consolidating here on the daily below all the key moving averages, so sometimes that denotes a pushback to the upside. Like, you could still get some extension back up here. So it looks like a pretty clear breakout on the RSI there. But it's kind of losing strength, right? Because it got pounded at the 50 level. So, you know, you're just sitting here at this POC, you're below the 21 MA, below the 200 daily, well below the 200 weekly. So if you were to come back up, even come to this high volume node here, like 5.4%, just above the golden pocket, if you can't hold this 200 weekly as support, that's going to continue to be bearish and continue a downtrend. Could even create something like or you might see something like that. So we'll keep an eye on that. It doesn't seem like tether dominance is going to be able to run away here anytime soon. The stochastics is trying to curve down at the 50 level too. That would be a pretty bearish sign if that were to confirm. It's interesting. get my total 3 back here. Or maybe that was the others that I had up. Let's take a look at the others. So this is your altcoins. The others are consolidating. This is everything outside of the top 10. Consolidating a point of control, 21 MA. You've wicked off the 200 weekly. You need to flip the 200 daily to support. That's at around 258. Let's call it 260 billion. Pretty obvious overhead resistance line forming. This is kind of like a, it's got a little bit of a falling wedge vibe. Pretty close to being a parallel downtrend channel. You know, you got to get the bounce here, because if you get denied at like the 200 daily, you're going to lose the 200 weekly. You're going to come back down to this POC, and that's going to be a 50% haircut for the altcoins, and that's going to just destroy the market. You're looking at least 6 months to consolidate. All right. Total 3, again, holding serve at the 21 MA. Stochastics look a little questionable. This 50 level on the RSI looks like it could be compromised. This doesn't look like the most bullish pattern here right now, so it's not giving me the same bullish vibes that I was seeing with BTC. Retracement here, you know. POC high volume node 565 billion, so 20% haircut for alts if that happens. ETH BTC, this is not looking bullish. Again, I was hoping for this pair to hold serve. It just hasn't been able to do so. So like right now, this is probably what you would expect in terms of retracement here on that move. So that's not necessarily the worst things. You're getting the bounce from the 786. Actually got this nice bullish divergence here. There's a couple drives too. So you got that one there, and then there's this one here. This smaller one that you can see right there. So that's actually a real nice bullish divergence on the 4 hour for the ETH BTC pair. This is going to have to hold serve here. It's going to see a much more significant move down. I don't like this 4 hour though. I don't like the 4 hour at all. That's going to have to reset and hold this level. Something throwing me off here. There it is. I couldn't find my 200 daily, but it's like flat right now. It was curving down, 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 and it's like flat. And it's actually crossed above the 21 MA, across below it here, and now it's crossed back above. So that might not be all bad. I would look for potential confirmation of a bullish signal here, because we do have a bullish divergence that is forming on the daily as well. So closure at this level today should actually confirm that with a green candle. So we should see the reversal coming in here. This should be a like inverse hammer reversal that we're putting in for ETH BTC pair. So keep in mind the start of the run for Ethereum under the BlackRock ETF is officially on. So you should be in ETH, folks. You should be in Ethereum. Again, not financial advice. So in terms of what ETH is doing here, hold and serve at the 21 MA on the 4-hour along with the rest of the market. Hold and serve above the 200 daily as well, which is just below that 21 MA. So nice bullish sign there, as there were a couple of nice wicks that bounced off that after a few 4-hour closures below. So that's a bullish sign, along with this wick here off local point of control in 21 MA. So that's fairly bullish for Ethereum. You got to get above this high volume node. I would say a couple 4-hour closures above 34.62 should propel you to the next upside targets, 35.92, 36.99. All right, flipping over to BNB, third largest cryptocurrency by market cap. Daily chart here is looking pretty bullish. Price action held well above the 200 daily, couple wicks down, closures above. Again, hold and serve here at the 21 MA with a wick off of that, fighting the local POC. Once you see the price action above that, daily closure above, I mean just above the level that you're at, probably 585, you know, daily closure above that level. Let's even call it 603. All right, just to be safe, just so you close above this last volume area. That should get the party started for BNB. Next area of interest would be just above $700, right around this previous all-time high. And then that will get you started for your next targets. 1.618 extension is sitting around 827. And there are measured move targets just above 1,000 and just below 1,200 at 1191 for BNB. All right, take a quick look at Kaspa. Kaspa actually looks like it needs a little bit more consolidation on the 4-hour. Might need to come back to this 21 MA. You're kind of losing the stochastics on the 4-hour into this oversold territory, and you're also dipping down a little bit on the RSI, kind of in that middling or waffling position. So in terms of where this could come back down to, golden pocket here, 16 cents, high volume node just below that. So 16 cents is probably the accumulation level. If for any reason this level breaks, which is, you know, 15 cents, 4-hour closure below 15 cents, look for a retest of the 200 daily at 14 cents, and perhaps even a little larger retracement for Kaspa to this macro golden pocket, 13 cents. All right, so those would be areas of interest if Kaspa can't maintain an uptrend right now, which it may need some more retracement after seeing this peak here on the RSI on the 4-hour. May need to reset a little further. Let's keep an eye on that. All right. A few requests. Let me just touch on silver real quick before I jump into that. I did want to cover the price fluctuations in silver. These are pretty significant price fluctuations for metals, folks. Silver topped out back in May around 32.50, just hit a local bottom just above the 200 daily at around 27.50. All right, I just want you to get an idea here. That was a 15.5% move. A 15.5% drop for an asset that is traditionally considered to be pretty stable. So time may be running out on the market manipulation and the price suppression of silver. It's a great buying opportunity right now. You know, this is a deep retrace to the 786. This is cryptocurrency type of volatility right here. Okay. This is wild volatility, folks. You can make a lot of money here. You can also preserve some wealth and have a little bit of sanctity and peace of mind if the financial system does collapse. Silver is a great barter tool. So just keep that in mind. As always, none of this stuff is financial advice, but this is a nice dip. And again, this is crazy volatility for silver. This is something you really need to keep in mind. Volatility is picking up in these markets. When that volatility picks up, it usually means that we're going to see a much larger move one way or another. So I do think we'll continue to see upside resolution for metals and cryptocurrency going into next year. All right. Chris did have a request to take a look at Zeph. That's one that we've been taking a look at on and off here. There was a larger channel breakout, which right now is kind of just flattened out and lost a larger point of control. There is, however, this consolidation on the 4-hour with a bullish divergence that could bring the price back up here. So this range here is the range of conviction. All right, so if you have conviction in this project, anything in this $2 to $3 range is accumulation, and you could see much higher prices. Unfortunately, this last move was denied around the $5.50 range, so you will see significant resistance at that level. Yeah, I would say if you come up and break that, you're looking at moving up to $10 pretty quickly. So again, this is an area of conviction. If you have conviction in this project, you could quickly 4 to 5x your money if this move starts to play out. There is potentially a larger move setting up. And I want to note as well, let me backtrack here real quick. We did have this head and shoulders mapped out, all right? And the measured move of that head and shoulders is literally right to the exact bottom of that accumulation range. So, you know, the last time I looked at this asset, I was looking at it as potentially an area to take profits and reaccumulate, and would have been a nice play. I wasn't in it. So, again, conviction at this point in the market. Conviction, conviction, conviction. You should not be buying anything that you don't have conviction in. All right. So with that said, Xavier wanted us to take a look at a couple other miners. Ethereum Classic is one that's been around for a while. This is actually the original Ethereum before it forked to proof of stake. So this doesn't look all that great on the 4-hour. You're below the 200 daily and 200 weekly, which literally are right on top of each other. That level is 2750. I would say breakout and retest above that level. A couple 4-hour closures above 2750. You could see an uptrend resume for ETC. Let's see if the weekly's giving us anything here. Excuse me, I got a little bit of hiccups here all of a sudden. This is kind of a tough one. So, like, what are we in here technically? Is it like a chubby triangle? You got to get above these moving averages. Everything is just tight here. The 200 daily and 200 weekly are right on top of the weekly 21 MA too. So you've got to get above 2750. Above that, see like a cup and handle move to maybe $65, $65 area. I'd say if you start to see closures above $75, you can take a crack at the all-time high. 120-ish is probably going to be like your fib extension. Yeah, your golden pocket's just below 120, so, you know, if you close a weekly above that golden pocket, above 120, then you can try to take a crack at all-time highs. New high would probably, you know, take you into the range of $274. So maybe a 10x from here. Maybe. All right. Last run it did a pretty nice move from below $4 up to this high here around 175. So that was significant gains for folks who were able to get in there. Is it going to reproduce those same gains this run? Probably not. You know, could you see an impulse up to this area? Yeah, I mean, it's, if you look at the history here, it's higher highs, so you could see that. Could see that for etc. And then, or excuse me, for Ethereum Classic. I'm at the end of my fast here, folks, so bear with me. If I start to lose my mind a little bit, we're almost done. This is going to be the last coin for today. Xavier asked us to take a look at Atom as well, which it's unfortunate, but this one just hasn't done shit. It really hasn't. One saving grace right now on the weekly chart. Let's get rid of all this stuff here. Move over to the log on the macro. I think on the macro it makes a little more sense to use the log. Alright. You're in this thing here right now. Okay, so this area has to hold, basically. You do have this bullish divergence on the weekly. Alright, and it's pretty strong. It's pretty strong. So your stochastics are pointing up. You've got a bullish divergence. It's probably time for everything to move up. Again, what are the best plays in this market right now? What's really going to make you the money? Are you just going to see, you know, a less than spectacular move out of an asset like this? Probably. So absolute high side from here is 160, which, you know, that actually represents above a 20x. So is there potential for a decent move from here? Yeah. I would say it's more likely you're looking at a 5 to 10x. Okay. If you can't make new all-time highs, it's a 5x, around $30. If you're entering here, you should be exiting part of your position at that point. So if you're entering Atom here, you're going to take partial profits at $30. Again, not financial advice. Price could extend from there to around $60 to $70. And then in a really, really extreme case bull market where, you know, maybe this thing finally does see its interoperability really start to take shape and that use case starts to come out, you know, maybe you could see 150, 160 and potential 20x. I think there are plays that will bring you more money in this market. And, you know, one of those, which is admittedly much higher risk, would be Pepe. So Pepe's kind of accumulating right now. I did buy some in this range. Da Vinci Jeremy, who is an early adopter of Bitcoin, has been saying that this thing could 100x. So sitting at a $111 million market cap, you would be looking at an $11 billion market cap for this thing to 100x. So is that impossible? No, this is the Chinese version of Pepe. So if that becomes a thing, you know, this is potentially a play that could really get you going. Your next measured move on this would take you up to an area around this like 7,200. It's sitting at around 2,600 right now. It's a nice area to potentially get in. Could see further retracement, however. If we were to see more dip on this asset, you know, you could look somewhere between about 1740 and this 786 retracement at about 1300. So could it still see a close to 50% haircut from here? Yep, it's possible. Totally possible, folks. So that's probably going to be about the long and the short of it for me this week. I think I brought you quite a bit. Yeah. I'm going to jump on out of here, folks. I'm going to get honking on out. This has been the Crypto Clown World podcast for the 28th of July, 2024. I hope you all have enjoyed. Take care, folks. Much love. God bless. Hopefully we will be seeing you soon.